Property prices have started falling and Tier 2 cities are taking the biggest blow. Smaller cities, where the property boom was fueled by speculators and pre-launch sales, are witnessing an exodus of investors. HiRise finds many small developers in these cities are now forced to sell out to big players. And this could be the beginning of a consolidation in the real estate market.
The correction in property prices across the country is gathering steam, and most Tier 2 and 3 cities that were riding high on soaring land prices driven by speculation are being hit the hardest.
If you look at Tier 2 cities and if you look at the profile of Tier 2 cities, clearly these are small local developers who've been building their business on local demand. They decided to pursue investment-led propositions, but clearly as the markets peaked and the government took very strong measures last 12 months, and they were quite obvious, impacted the confidence in the market, the sentiments in the market, and clearly that led to a kind of a cautious approach amongst investors as well as corporate end users, and there was a kind of a resistance to committing to such Tier 2 cities.
And when it comes to liquidity in these property markets, the tap has run dry. Developers were funding their residential properties with money made primarily from pre-launch sales of their apartments, in spite of construction barely taking off. This proved to be an attractive proposition when the property market was riding the high tide. Today, with most investors scouting for buyers themselves, pre-launch funding has come to a standstill. Developers used this money to pump back into an under-construction property at every stage, such that a residential development was necessarily self-financed, but no longer.
अभी तक देखने में आ रहा है वो तो यही लग रहा है Tier 2 सिटीज जितने भी हैं वही इस समय वर्स्ट हिट हैं। एग्जांपल लें अगर 2-3 सिटीज की बात करें, रुद्रपुर हो गया या हमारा पानीपत है या करनाल है, इधर पिछले 6-7 महीने में करीब 20 से 30% तक का डाउनफॉल है। रीजन बीइंग वही पहले स्पेकुलेशन ड्रिवन मार्केट था, अब क्योंकि आगे इंटरेस्ट रेट बढ़ गए हैं, कुछ इंस्टॉलमेंट्स आगे ड्यू हो गई हैं, पहले तो प्री लॉन्चेस थी, इंस्टॉलमेंट्स ड्यू हो गई हैं, तो इन्वेस्टर जो भी है वो सब निकलना चाह रहा है बाहर, इसीलिए सबसे ज्यादा डाउनफॉल इधर ही इसी एरियाज में आ रहा है।
I know somebody who bought 8 apartments with the objective of selling them off as soon as the prices rose. And what's happened is today he's not in a position to make the installment plan on those 8 apartments. So he can't pay up. Now he's willing to sell and he's desperate to sell. And he'll sell at what he bought it at and maybe even take a slight loss. So all the money is gone.
This feeling of desperation among speculative investors is being replicated in a large number of smaller cities, primarily in North, Central and West India. Industry watchers point out there is only limited demand in Tier 2 and 3 cities. But the euphoria in the property market led many small developers, in some cases people who had no background in the real estate sector, to plan big projects and make the best of the boom without taking into consideration the ground realities. Some northern Tier 2 cities are also on the brink of an oversupply situation. Prices of residential plots are dipping every fortnight.
If you look at some of the most obvious markets are in Gujarat, for example, Ahmedabad, Baroda and Surat, where a large percentage was dependent on investors. Likewise, if you look at a unique example, hilly estates like Himachal Pradesh and Uttarakhand were given a lot of incentives by the government, and there was a kind of momentum over there. Although people do believe in long-term future of those markets, but probably they went overboard and committed themselves too much and the values shot up. Suddenly there is a realization that even though there is a positive outlook on those markets, it is not something they can capture in the short term.
Correction in land prices, of course, it has taken a lot of cities in Punjab, like Chandigarh, like Jalandhar, like of course in Rajasthan, if you see Jaipur, if you see this Rudrapur, if you see Indore, also some cities where prices have gone down because of so many developers being started so many projects and demands not so matching as compared to the supplies available in the market.
In Jaipur, for instance, 15 kilometers from the main city, a 4,000-acre stretch along the Jaipur-Ajmer road is being turned into integrated townships and IT parks. These projects were launched almost 18 months ago, but demand for actual users is yet to come in. The result, residential prices that had touched 1900 rupees per square foot 4 months back are today down to 1600 rupees per square foot. And investors here are willing to sell for 1500 rupees a square foot. Gomti Nagar in Lucknow and the new bypass road in Indore, where over 6 mega townships are underway or planned, tell the similar story.
Indore is again basically an industrial city now, very well located, has potential to grow. Has it really achieved its potential? Not yet. So if you have too many projects coming up in too short a space of time, where absorption is not that much, you're going to run into trouble.
I would say 60% is still available for sale. 40% may have been booked. Every builder does claim about it that their property is sold off and 10% is left, or one particular floor is left. But there is availability.
With property investments in most Tier 2 and 3 cities losing their sheen, smaller developers in particular may have to bear the brunt, while the bigger players who have entered such cities may be able to survive the downfall in the property cycle.
Larger developers have already begun to acquire smaller ones and offload them of debt-ridden, failed or half-finished projects. Industry experts say this trend is one of the best things that could have happened in the property market, as it could trigger off a much-needed consolidation in the sector.
These guys are just not able to cope up, and in fact our company has earmarked certain amount of money which we've kept aside only for buying projects of this type, because there will be this is very beneficial for us because we get a consolidated project at one time, and it's also beneficial for the other developer because he is able to exit and get out of his liabilities which he is not able to fulfill, and he has pressures from his customers or suppliers or whoever is there. So it's actually a win-win for both. Of course, the smaller developer loses out more, but that's because he's stuck.
But not all such projects may be credit-worthy. With most big developers having already established a pan-India presence, they may not necessarily want or feel the need of a much larger footing in smaller cities. Moreover, with end-user demand at the lower end in such locations, large developers too could begin grappling with their existing projects in Tier 2 and 3 cities.
We faced it in '95. In fact, we picked up some projects that were half done. And we also picked up certain properties which somebody had announced and probably just pre-sold it, and they couldn't even go ahead with the construction. But this sort of a thing could happen all over again. But then all these we have to look at it on an individual case-to-case basis, because they come with a lot of problems, and if there's some pre-commitments, how to solve the legal issues.
Private equity funds as well that have gained popularity among developers, with banks almost shutting their doors to them, may not be willing to finance most developers.
One of the issues that comes up is the transparency. The other issue, their accounting systems may not be in order. If you put them through an audit, it probably wouldn't. They probably won't clear audit at all.
Till a few months back, investors were snapping up properties and sizable plots of land, particularly in Tier 2 cities, on the assumption that another person will buy the same product at a higher price. Now, however, investors could be left with raw deals. And with the consolidation in the offing, industry watchers feel the real estate sector is heading for more mature times.